you're part of a dual income household with no kids, this episode's for you. Welcome to the Emerging Wealth Podcast, a podcast dedicated to tax and financial education for high-income professionals. My name is John Boyd. I'm a certified financial planner. I'm the founder and lead wealth advisor at Modern Wealth. That's modern spelled with no vowels, wealth. I'm so glad you're here today because we got a good one for you. We're talking all about that DINK life, dual income household with no kids. We're going to talk about the 5 major considerations that you need to keep in mind if you are part of this demographic. And the reason why I wanted to do an episode on this issue is that for most folks, this period of time where you have dual income and no kids, it's only temporary, right? It might only last a few years. It might last a decade, whatever it is. It generally is a temporary period in your life. And the reality is that once kids come along, things can get really, really expensive. The lifetime cost to raise a child in today's dollars is around a little over $300,000. The first year cost of having a child is anywhere from $20,000 to $50,000. So the reason why I wanted to drop those numbers is that once you have children, right, your family economics changes a lot, right? You might have to reprioritize where your dollars are going to once you have children. And there's nothing wrong with that, right? There's tons of financial content out there talking about what you need to do and how to optimize your finances once you have a family. But not a lot of people talk about when it's just, 2 partners in a household stacking up money, how do you optimize things? The other consideration is people get burnt out on their careers, right? People want to retire early. Who's to say that maybe your partner doesn't always want to be working the job that's allowing them to stack up all this money, right? Maybe they're going to get burned out. Maybe they want to do something a little bit more chill and laid back. And so that dual income money that you have going, maybe that gets cut in half effectively once your partner decides to take their foot off the gas a little bit, right? So there's tons of different ways that this could play out. But bottom line is, if you are a dual income, no child household, this will very likely be a window of time in your life. And we're going to talk about the 5 big considerations that you need to keep in mind. So let's go ahead and dive into it. The first consideration that I want you to keep in mind if you are a DINK is budgeting and lifestyle creep. Okay. Now, let me just say this up front. I do not want to be a budget maniac, right? I'm not saying to have tons of Excel spreadsheets and track every single penny that you spend and be neurotic about your spending habits, right? I'm not saying that at all. I'm not saying to cut back on going to Whole Foods and eat canned beans and ramen to save, right? I'm not saying any of that. But there's an expression in the business world that if you're trying to measure the success of a particular business initiative, that you need to be able to quantify it. And if you can't quantify it, you can't track its success. And it's the same thing here, right? If you can't directly quantify with data your spending and know where that spending is going, you have no idea how successful your cash flow strategy is. So I would encourage you to have some sort of app, program, whatever it is, that tracks your spending habits. Okay. And again, I'm not saying to cut down your spending significantly. I'm not saying, stop traveling and doing things that you enjoy. I'm just merely saying you need to be able to quantify it. So apps like YNAB, you need a budget. Mint, some of the banks have like their own built-in apps with them. At Modern Wealth, we have our own budgeting app through our financial planning software that we let clients use, right? Whatever it is that you need to have some way of tracking it. I'm not a huge fan of the Excel method because I've had clients send me their Excel spending sheets And once we sync up their credit cards with our kind of spending software that we use, the numbers are way off, and they end up spending perhaps way more than they thought because they were manually tracking it. So take advantage of technology and quantify your spending. That kind of leads to the second point, and that's lifestyle creep. Because once you track that, if you are noticing perhaps that you're spending, $3K a month on just shopping and dining out, I'm not saying that's a problem, but if that's deterring you from getting towards your goals, then maybe we should do something about that, right? I've had folks who have made $300,000 plus, and they come to me and they're like, man, like, we know we're doing good. We just don't know where the money's going. We have no idea where it's going. And we want to save up for our first home because we don't own a home. And then we do an in-depth cash flow analysis, and we end up finding out that, that they were spending, $4K a month on DoorDash, on going out to bars and restaurants on the weekend, doing tons of shopping, right? Whatever it is, it was eating away at that extra discretionary income that they had that could have potentially been funneled over towards savings. And again, they had no idea. So that lifestyle creep, because you have that extra discretionary income, because you have the ability to really spend money on whatever you want, not think twice about it, that could come back and bite you in the behind. So again, I want to stress that I'm not saying do not enjoy the things that you love, but just be aware of it. Be aware of that. And that kind of leads to this next consideration. And that's clarifying your life and financial planning goals. The reason why I want to make this a consideration is that, again, this period of time is perhaps only a small window. It might not last forever. And I'll give you a very personal example. For me, for my wife and I, right, we don't have kids. We're a dual income household. We have a dog, right? We have a big 180-pound Great Dane. That's pretty much our baby, but we don't have any actual children of our own yet. But during this period of time, building up, modern wealth, I've made the, decision that, hey, I'm going to put a lot of my energy, a lot of my focus into building up the company, right? I mean, starting a business is no small feat, right? It takes a lot of work to build up a company, to take care of clients, right? All that stuff. And the reason why I bring this up is that has inevitably caused us to kind of set a kind of rough timeline in the future on when we would want to have kids. So I would encourage you to do something similar, right? If during this period of time, it's a major priority for you to maybe get out and ahead in your career, right? Work towards those promotions that you want. Set those goals, set those priorities, set those expectations with your partner that, hey, I really want to dedicate time to grinding in my career, or, hey, we want to focus on traveling a whole lot during this period of time. We want to travel the world together, right? It doesn't necessarily just have to be career related. It can be life related, right? Enjoying the time that you have together before maybe kids come into the picture, right? Whatever it may be, set those goals, set those expectations, because again, this is a really unique period of time from not just a financial standpoint, but from a life perspective. And I think being on the same page will allow for a lot more optimization and overall happiness. Consideration number 3, load up on retirement and other assets during this period of time. This quite literally, right? If you were to run the numbers, right? If you were to max out your 401ks, do mega backdoor roster in this, maybe during a 5-year window of time while you have all this dual income coming in, and then you decide to take your foot off the gas because kids come into the picture, for example, that in and of itself could completely change the dynamics of a retirement plan. All of a sudden, you are able to maybe retire 10, 15 years earlier as a result, right? It is crucial that you take advantage of this period of time to load up on your savings. And again, it doesn't necessarily have to be just 401ks and things like that. It could be real estate, right? Because you have more flexibility to move around. Maybe you're buying a primary residence, staying it for a few years, and then moving to another one and rinse and repeat, right? And before you know it, you have 4 or 5 real estate properties under your belt. But because you don't have kids and it's just you two stacking up money, you have the financial and lifestyle flexibility to move around and build up, this real estate portfolio. Again, it's a unique window of time. And for most folks, it's only a temporary window. And if you're really strategic, it's during this window of time that generational wealth could be made. Fourth consideration is estate planning. Now, estate planning, we have a whole separate podcast on that, so I would encourage you to check that out. But bottom line is, most people are bad about estate planning, right? Most people neglect to set up wills, trusts, powers of attorneys, all that good stuff. They completely put it on the back burner and never do it. But I find that folks that are in a dual income household with no kids are especially bad about this. And the reason for it is, number one, generally speaking, you're both busy professionals, right? It's not on the top of your mind to go establish a formal estate plan. It's just not, right? You don't have time to be thinking about that. And on top of that, maybe you don't have kids, it's just you two. Maybe you really didn't have a whole lot a couple years ago. Now you have a whole lot. It just hasn't crossed your mind to establish any sort of formal estate plan. Here's the reality. You are probably doing better as a dual income household with no kids, just stacking up tons of money. You're probably doing better than most households. You probably have larger net worths than the average American. And you best believe you especially need to set up an estate plan, right? Because there's perhaps significant assets at play. And most importantly here, if you're watching this online, you'll see a note that says pets are children, right? You very likely have pets together. What if something happens to you and your partner and your dog doesn't have any plans for who's going to take care of them? They don't have any assets set aside for their care, right? If anything, allow that to be a driver for your estate plan. Because again, our pets are our children too, right? That's just the reality. We love our pets. And just because you don't have any actual, human children doesn't mean that you shouldn't have an estate plan that factors in pets and also factors in your assets and also factors in, the what if scenarios of if your partner was in the hospital, incapacitated, couldn't act for themselves, and you needed to access their bank account. You needed to make medical decisions on their behalf, right? A formal estate plan will allow you to put that in order. So again, don't let just simply being busy get in the way of setting up an estate plan. Stay on top of those things. Final consideration that we're going to talk about is tax planning. Set up a formal tax plan. And again, I'm speaking to the people here who do not intend on being a dual income, no child household forever, right? Some folks are, and we'll talk about that in a little bit. But the reality is that, again, this is a small window of time, and therefore the elevated income that you likely have from this period of time needs to be addressed. What are some savvy tax planning moves that you could make during this time? Well, a good tax plan would help you do that. I'll give you an example of that. Maybe you and your partner are very charitably inclined, and you really need tax deductions to reduce your household income because you guys are both bringing in a lot of money. And so as a result, you explore perhaps bunching your charitable deductions, right? Maybe instead of just doing a little bit of charitable giving over a 30-year span, you front load a lifetime of charitable giving into like a 5-year window of time to get a bunch of deductions during that window to reduce your taxable income. And then eventually, once you maybe have kids or whatever it is, then you don't have to worry about the charitable giving, and nor do you really need the deductions associated from the charitable giving because you really needed it during this period of time. So again, come up with a formal tax plan. Look for ways that you can reduce your overall household income during this time, because again, there's tons of different techniques associated with taking advantage of elevated periods of income for maybe a multi-year period of time. The last note that I'll make, if you are a dual income household and you never intend on having children, then it is critical for you to think about the flexibility that you may have as a result of that, right? Maybe you plan on having, this elevated income for a 10, 15-year span and then retiring maybe in your late 40s, mid 40s, right? Whatever it is. It's entirely conceivable that you could do that. I've worked with folks where that's been the case. It's just them. They're stacking up tons of money. You would be surprised what the data looks like when you are a team putting money away towards your goals, right? It allows for a lot of flexibility. So I would encourage you, again, kind of going back to one of the previous points, being on the same page. If you intend on being a dual income household for a pretty extended period of time, think about moves like potential early retirement, because again, that could be a reality for you. Well, there you have it, guys. That's our episode on Finance 101 for DINKs. Hopefully you learned a thing or two or got you thinking a little bit more in depth about something. If you need more in-depth help on your particular situation, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. We'd love to help you out. We'll see you next time, guys.